G'day folks, welcome back to another update for Bitcoin and Ripple. Now the charts have turned bullish on the daily time frame, so slight bullish movement at the moment, but still watch for any divergence that's still in play, and I'll go through those in a minute. Going to include some back testing. Before we go any further, make sure you hit that like and subscribe button to support the channel. It'd be greatly appreciated. And also reference the +1 videos for a deeper dive into some of the trading strategies. And today we're going to demonstrate the CCI14 and also the CCI350 trading strategies with Bitcoin and Ripple. In terms of the outlook for Bitcoin, the key drivers: institutional adoption via ETFs and favorable macro conditions. Post-halving supply reduction continues to support long-term price. In terms of the risks for Bitcoin, short-term volatility, the market may be overbought, and a surprise hawkish shift from the Fed could trigger a correction. For Ripple, key drivers: legal clarity in the US and a strong focus on enterprise adoption. A potential spot ETF approval is a significant catalyst. In terms of risks for Ripple, high volatility and its struggle to break key resistance levels. It faces stiff competition and could be sensitive to broader market sentiment. So starting off with Bitcoin, so on the weekly first off, you can see the price is still above the moving averages, so edging higher still. Although notice the CCI highs here are declining, so that's a bearish divergence. We look at lower highs on the CCI versus higher highs on the price. Now, it hasn't started to pull back yet. I've drawn a target range there, the 23-38% Fibonacci range. Came close to it there, but now it's starting to rise. Now, if that CCI goes higher, and especially higher than this area, we're going to invalidate it. By that stage, we'll see the price break higher as well. So at the moment, bullish, somewhat neutral to bullish momentum. Neutral because the CCI is in a decline, so just be cautious. On the daily, that's already bullish, so we take long trades on the hourly if you're going in the direction of the daily trend. So that sees the price is broken above the moving average there, and so is the CCI. So I've started the back test from that point. I'll show you that in a second. And you would have been going short during this period. Now back here, we did have a bearish divergence. You can see there, I drew a target. That broke down eventually, and there was another smaller bearish divergence there as well. I haven't drawn it. So higher highs on the price there versus lower highs on the CCI. So this one came down, missed it that time. Actually might have just touched it possibly, or came close to it. This one now has actually broken very clearly into that range. And in terms of Fibonacci range, I've drawn that from that high to that significant low. That's a 23-38% range. So it's broken into that range and then it's bounced out of there. More than 90% of the time, it at least touches this area. Sometimes it falls right through, and we can't tell from this chart here how far it goes. That's why we follow the CCI. You could see there the CCI kept falling until eventually started to correct and moved higher. So at the moment, we're in a bullish momentum, and that's the daily. Now on the hourly, if you're trading on the hourly, we look at the daily trend, and if you're trading on the daily, we look at the weekly trend. That's the general principle. So looking at the hourly, we'll see if there's any micro moves before we go to the back test. So looking backward, working backwards, you can see here declining highs. We take it back to that high versus on the price, same period, higher highs on the price versus lower highs on the CCI. And again, that's another bearish divergence. This is going to be similar to the daily. I'm going to draw a target range there, and assuming it pulls back from where it is at the moment, it could go a lot higher, of course. So we're going to draw a little target range, a 23-38% range. So like I said, this could go higher. The CCI could break higher, and if it does break higher than that, we're going to invalidate it. But even if the CCI keeps dropping, that price can still rise, in which case it'll still be a bearish divergence, and we have to realign that target range. Now if we go to the back tests, this is the daily chart here, so you would have gone short during that period with the CCI and the price below the moving averages. And since that point, you would have closed out your short positions when the daily broke into that moving average range at the very latest. And you would have opened up another position when the price broke above the moving average, and so did the CCI, and that's where I've got these two back tests. This is the CCI14, and again, reference the +1 videos I did about a week ago to get a better insight into both of these trading strategies. But again, zooming out, again, you would have gone short during that period based on the daily trend, and at the moment, you'd be going long. And this is the CCI14, and you can see there it's generated, baseline is 100,000, so it's generated about 8,900 as we speak. And this one's already closed out the CCI350 strategy, and it's generated 8,600 so far. So this is Ripple. So on the weekly first off, the price is above the moving average range. Again, notice a very long-term bearish divergence, and that's still in play, it seems. Looks like it broke down initially after that initial point to that level, and it's bounced off that 23-38% range, and that's what I said earlier. Sometimes it just touches it like it's done here. Other times it falls a lot further. So I don't trade these divergence. I use them as potential exit areas if I'm trading, or a potential lookout for a reversal. So the daily is, again, similar to Bitcoin. It's neutral, bullish on the price, but bearish on the CCI. So just be cautious if you're trading on the daily. And on the daily here, again, a declining CCI, and you would have been going short from that period since we've been trading previously. But at the moment, you'd be going long from the 8th of September there when the price broke above the moving average, and so is the CCI. And you would have closed out your trades on the 1 hour time period if you're trading the 1 hour. You could have closed it out there a bit early, but you could have closed it out there, maximize your gains, or at the very latest, close it out on the daily on that candle there. And that would have been a very small gain on that little rise if you're trading on the hourly. So again, on the daily, it's somewhat neutral. Again, wait for that CCI to break high to go long. On the hourly, again, working backwards, let's see if there's any divergence. That CCI seems to be moving in line with the price, so there's no divergence there. The last one we had was back here. We had a small one that broke down, hit our target. And then after that, we had another one which went from that point to there. Same point there on the CCI, so declining CCI peaks. There's this high highs in the price, and it looks like it's already hit its target range. So let's go from that high. Let's take it back to that significant low. You can see there very clearly it's broken into that 23-38%, came close to the 50%, and it's currently still in that 23-38% range. So always pay attention to divergence. Now again, this could go either way. At the moment, the price is just slightly above the moving averages. So slight bullish move there on the hourly, but notice the CCI is broken below the moving average range, and it looks like it's going to potentially break further to the downside. So I wouldn't be going long at this point. Now, if we look at the back test, what I've got here again you would have gone short during that period from around about the 14th of August, and you would have closed it out possibly one time there, but at the very latest during that period there on that candle. And the next day you would have started going long on the 8th of September. That's where I've got these two back tests with the CCI14 and the CCI350. And you can see here, this is opened once, and we're trading $5,000 lots here. It's been fluctuating in alignment with the price. So this strategy, the way you work this is, you close it out when you get a 3% gain at the very least, if the price is still moving in the upward momentum on the daily chart. But when the daily hits that moving average range there, you possibly could have got out there. Now here as well, if you're following the CCI 14 strategy, you can close it out once it starts breaking below the moving average, below the zero line as well. They could have generated some gains as well. But on the CCI 350, you can see there when the CCI 350 is above the moving average, weighted moving average 100, and that closed it out once there, and then reopened. Now here you would not have reopened it. The back test here has, because I haven't put any parameters in there. But there you would have closed it out at that point, and you would not have entered it because the daily had already broken into that CCI moving average range. So you would have closed it out after that first trade. So in this case, the 350 strategy would have generated a better return. So hit that like and subscribe button to support the channel. That would be greatly appreciated. And if you enjoy the content, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across regions of the world's markets. Thanks, and talk to you in our next video.